from what I've seen in Manhattan, we've seen a lot less activity. However, they just announced yesterday they were going to reopen the restaurants, but it's one of those wait and see kind of things. What I've seen with, you got to think of it like when you go to an amusement park when you're a kid and you got that friend who's pushing you to go first and you don't want to go first. People don't want to go first yet, but eventually you go on and you enjoy the ride. What we're dealing with is a much more serious topic here. I don't want to make light of it, but the thing you have to remember is at some point, you say to yourself, you know what, I'm going to go eat, I'm going to go enjoy myself, and hopefully my favorite restaurant is open and ready for me. But that being said, you're definitely going to have challenges and issues with the economy slowing down. I mean, if you look at the jobs numbers that came out, it pointed to a slower recovery than had been previously thought. And that's something you and I have discussed previously, that we don't think that this recovery of sorts, I mean, some sectors are going to go up and bounce back quickly, but a lot of sectors, 485 stocks in the S&P are not participating like the top 15 stocks, like your Zooms and your Microsofts of the world. So there is challenges, there are issues that need to be resolved, and a vaccine is key to what needs to happen next to get us to that next plateau, so that way the recovery can begin in earnest, and that way we can move up and not move beyond, but most certainly we're seeing just an amazing amount of people that are staying home, and this does not bode well for commercial property, and that's another conversation in and of itself. I think that the market is going to pull back even more, albeit it's not going to be so dramatic, but it's normal. I would be even more concerned if this didn't happen now, that these technology stocks didn't pull back, didn't self-correct themselves, and the market didn't correct itself, on a broad range. It's normal. It's something that has to happen. You don't have to feel good about it, but it definitely has to happen. But here's the thing to keep in mind. With any broad range correction and the like, there is an opportunity, and the opportunity to go in and get certain stocks at discounts versus paying 20, 30, 50% higher in certain cases. Also have to remember that this is the time of year hedge fund managers, mutual fund managers, advisors, we are selling and buying at this time to declare losses and gains for the year in the portfolios. So that happens roughly every time. We didn't see much of it last year, but it happens roughly from September to mid-October and sometimes late October to declare those losses and sometimes to go back in. So that is normal, and it's something that stabilizes the market, and I think it's something that has to happen in this environment, because if it didn't happen, I would be a lot more worried. It's really up to the investor to look at their risk tolerance, to look at their investment objectives, and to see if that particular investment, whether it be tech, whether it be other sector, is appropriate for their portfolio, that they're not taking on too much risk to derail their goals and objectives. That's the last thing you want to have happen. The second part is the timing. Do you really want to go timing the market, or you want to stay focused on, okay, I'm going to sell a winner at this point, and then maybe I'm going to wait 30 days and then come back into that same stock. Some investors do this, and this is to avoid a wash sale or the tax treatment of buying and selling in a portfolio within that manner, that they do get the advantage of the tax treatment to their benefit, and at the same time getting back into a security that they've liked for a long time without having to feel bad about it, that there's obviously more opportunities. So you may see a lot of people do that, but then the broad appeal, the broad sectors, people are looking for places to go into. And that's going to continue, I believe, throughout this year and next year, where, like I said, we only had a very narrow sector on the upside, being 15 stocks in the S&P, and we have 485 just waiting, to continue. Some of them have participated, of course, but not to the extent that we've seen those 15 stocks, and it really depends on if investors feel certain that those companies can go in and make the amount of money, make the every single quarter that they have been accustomed to with this new reality. So it's a confidence game on the part of investors, and it's also it's imparted with the investors to make sure it's within their rights, within their risk to do so, because that's really the game. You don't want to go into something that's not in for you, that doesn't make sense, and is not part of your overall plan.